Hello everybody, welcome to another episode of my channel. In today's video we're gonna have a look at the chart of BTC and Ethereum. We're gonna see if we can find a few trades, okay? First of all, we are in the weekly time frame, okay? We're gonna mark the previous top of the bull market in 2017. Okay, it's around here, and we're gonna mark the lowest of the bear market, okay? From here better, this, yeah, okay? This over here are deviations, okay? This is one deviation and this is another deviation, okay? Fake outs. We're gonna mark now the middle point of the range. Okay, we are now playing in this upper band range, okay, in the upper side. Then we're gonna go to the daily time frame. We're gonna mark the middle point of this range, okay? We're gonna make a second range inside of a range, okay? Let me change this color. Okay. We can see that we are bouncing in the middle range of the weekly ranging, okay? We can see that here we have some inefficiency. Let me change the color. Example green and thinner. We have some imbalance, inefficiency, okay? Why I mark the first thing that I do is found the imbalance in the market, because 90% of the time the market doesn't like to leave behind imbalance of the market, okay? In the market. If you see, here was an imbalance here between this week and this week. The price went down and came up to fill the balance. You see the imbalance, you see, almost to the T. Okay, the same here. From this week to this week, the price went almost to the T. Okay. As I said, the markets doesn't like imbalance. They use imbalance as a point of reference for put their entry points and stop losses. Now that we managed to find the imbalance, we're gonna mark and we're gonna go in the smaller time frames to see if we find a better entry point, okay? We're going to the 4-hour time frame. We can see that we can adjust our imbalance. We're gonna take from this week to this week, okay? We're gonna mark the middle point, 0.5 Fibonacci retracement, and this is gonna be our entry zone, okay? This is gonna be our entry zone. We can remove this. Now we can scale even more, okay? We're going to the 1-hour time frame just to adjust our stop losses more amount. Okay, we can see here. Now from this week to this week. middle point. We're gonna see if the middle point is in place. We have to move just a little bit. Okay, remove the fibs. This is gonna be our entry point, okay, around $19,000. Let's go again to the 4 hours and to the daily. Okay, this is where we're gonna play it. Okay, play. This area is where we're gonna play. What are we waiting for? We're waiting for the price to tell us what we want to do. Okay, we're gonna mark a trend line here. This is gonna be our resistance. Okay, you see, 1 touch, 2 touch as a resistance. We're gonna try now to make 2 cases, one for long, for go long, and one for go short. Okay, now that we allocate, we find our point of interest, we're gonna go to smaller time frames, and we can see here that we have another block here. You can see here, perfect. This is called another block. Okay, we're gonna take from this body of the candle to the body of the candle. Okay, we see that this was already managed to fill the inequality. Okay, we can remove, and we are now focusing in this place. We're gonna make now, we can see, if we go to the 8 hours, we can see that we see another range. We're gonna mark the range from this week, swing high and swing low. Okay, let me put this in another color, orange, and we're gonna mark the middle point. Okay, we remove the fibs. What I say in my previous videos, I don't trade middle ranges. Okay, only upper range and lower range. What I'm expecting, if I throw the Fibonacci retracement from this high to this low, let me change the color. We're gonna put this in, for example, in purple. Okay, we can see that the 0.618 Fibonacci extension, Fibonacci retracement, is coinciding with our point of interest. Okay, what can happen? Let me remove now. I will leave the fibs. What can happen now? We fake already in two directions. We fake the first direction, we fake the people thinking that we are going to go lower. We didn't. We took all this liquidity here and we rip higher. Okay, what happened later? We came to the upper side of the range and we took all this liquidity here. 2 fake outs, 1 fake out lower than the previous low and 1 fake out for the previous high. Okay, what can happen now? What I see on the charts. Let's go deeper. We go to the 4 hour now. What we can identify now? We can identify that is a lot of empty space, a lot of inefficiency in the market in the upper side, and we have, let me see, this is okay, this is okay, okay. We are waiting now for the retracement. Why? in my previous videos I talk about the drives, 3 drives. The markets always move in 3 drives. 1 drive, retracement, 2 drive, retracement, 3 drives. Okay? After a wave of 3 drives is coming a rectification down. Okay? The same, 3 drives down. 1 drive, we are waiting for the 3rd drive, and we're gonna make a 3rd drive. Okay? Now that we have found our point of interest, that is 3 drives wave, we're gonna remove the waves. We are waiting for the 2nd and 3rd wave, okay, to the downside. That means that the price is gonna have to mark 3 drives. 1 drive that is gonna take this liquidity over here, okay, or this one over here, all these stops, is gonna do the 1st drive, the 2nd drive, sorry, will come here to retest these lows and do the 3rd drive and take this liquidity here. Okay, this is what I'm expecting. Then how we play this? Easy. We go to the higher time frames, daily time frame or weekly time frame. Weekly is gonna be easier for see where we can find support. Okay, we see that we broke already this support with these wicks over here. The next support is gonna be around here, more or less. You have 1 wick here, 2 wicks here. Okay, more or less. Here is not a big support. We might go lower to the 11 or $12,000. Okay, but we will play our cards. Okay, now we identify where the price can go next. Okay, we can check for another confluence. How? We're gonna drop some Fibonacci from the low of the bear market in 2018 to the highs of the bull market in 2021. Okay, we take the Fibonacci retracement from the lowest point of the bear market to the highest point of the bull market. Okay, what we see here, if I focus more inside, you can see here that we have a very important Fibonacci retracement. Okay, here the 0.868. We have already 3 confluence. Alright, this is enough for me to play my cards. Okay, we're gonna go now. We identify that the price may go in this area over here, between here and here. Okay, we remove the fibs. We have the confluence of the Fibonacci, we have the confluence of the middle point of the weekly range, we have some support, and we are missing 2 drives from the 4-hour time frame. Okay, now that we identify our areas, let's clean a little bit the charts. We remove these fibs. Okay, perfect. As I said before, we are looking for 2 more drives in the 4 hours. 1 drive, we are waiting for the 2nd drive and the 3rd drive. What I'm looking for? I'm looking for something like this. The price come here, rip higher, retest the broken support, and do the final 3 drives. Okay, to take these lows over here. Where is gonna be my point of entry? When the price rip higher, come to retest as support this area where all these points have support before, one touch, two touch. I'm waiting for the third touch, okay? When I see the price holding at least 1 or 2 4-hour candles, rip higher and break the previous lower low, here is gonna be my entry point, okay? Entry point, stop loss below the previous low, okay? If the price come here, my stop loss will be a few pips below the low, okay? Take profits is gonna be to the middle point, okay? My first target, TP1 and TP2. If I want to, I take partial profits in the middle of the range, and if the price broke this middle range, I will take my second TPs around this resistance over here, okay? Around 18,000. First target is gonna be 16,700. Second target is gonna be 18,000, okay? This is the case that this is the trade for go long. Now we're gonna play now. We're gonna manage to get our short entries if the chart is showing us that want to go lower, okay? Much lower. What I will do in that case, very simple. Go to the daily time frame. Let me remove everything. Okay, clean chart. Again, range, swing high, swing low. Middle point will be something around here, okay? If I see that the price do something like that, it's trying to break this resistance, but if rip higher a little bit, come down and cannot find support, try to break again and fail, I will wait for this entry here, okay? Let's see if we find a short position. We see now that the chart is telling us that want to go for the second drive and third drive, remember. This is only for big time frames, for big trades, okay? I'm not looking for 5% or 7% wins, okay? I'm looking for 10, 15, 20% trades, okay? I play with very little leverage, okay? Like 2-3x maximum. This is a long play game, okay? Don't try to play with too many leverage because you're gonna lose all your money. Okay, now we can see that we are in the middle range. I don't trade in the middle range personally, you know that. Now is finding rejection, right? 3 drives. If you want to get in a trade now, you're waiting to break this low over here. If the price manage to break this, come up, retest this resistance and fail to break it and rip higher, my entry point will be here, okay? For the short position will be around here, okay? Stop loss to the previous high, take profits will be to the lower side of the range. Very easy, guys. I repeat again everything, okay? Now I'm gonna do in the Ethereum chart just to refresh everything that I say. Weekly time frame. This is Ethereum dominance, no? Okay, Ethereum chart. Remove everything, clean chart. We see that what we see in the first place. We see that we have one drive, two drive, we are waiting for the third drive, right? I'm gonna mark one drive, two drives, and we are waiting for the third drive, okay? Clear? Okay. Now we're gonna mark our weekly high from the previous bull market, our lower part of the bear market, okay? Here, we're gonna mark the middle point. We can see that we are in the middle of a range again, okay? Now we're gonna go to the daily time frame. Okay, we can see that we have a range here. This swing high, this swing low. This we're gonna take. We know that this is the weekly middle point, okay? We have a range, right? Let me change the color and put a little bit more clear. Okay, now we mark the middle point to have a reference. Okay. Now that we identify the range in the daily time frame, what we can see, we're gonna mark our trend line of resistance somewhere over there. And we're gonna try to find our trade, okay? In this part over here. We go to the 4 hours. And we can see that we are in a range again. We're gonna mark the range, swing high, and swing low. Okay, middle of the range. I always say if it looks like a range, trade like a range, okay? Middle point. Okay, now easy. We know that this is the higher time frame range, and this is the upper side of the range in the high time frame, okay? Now, this area over here, we're gonna use for take profits, okay? This and this. This is gonna be our areas of interest, okay, for taking profits. Now, we already lose some trades, okay, because here was a good entry point, here was another good entry point, and entry point. I always say don't trade in the middle of the range, trade only on the higher parts of the range or lower part of the range. Okay, now it's just ranging in a small, very small range that you can trade in the 15 minutes or 1 hour, but it's too risky, and the risk to reward is not for in my way of trading is not good enough. Okay, now we are waiting for the price to give us some details. Okay, now what we can identify here, we can identify that is inefficiency in the market. Okay, we're gonna clean this. Okay, here inefficiency, what we mark from this week to this week over here. We're gonna put this in other color, in, for example, orange. Okay, and we go for the middle point of the imbalance to set up our entry points. Okay, this middle point is gonna be our entry point. Okay, let me clear the lower one. and the upper one. Okay, now we're gonna look to the right. What we can see here, equal lows, right? The market doesn't like equal lows. Okay, always when you see equal lows, the price is gonna come sooner or later to take all these stop losses. Okay, all these people that are here, they think they are winning, they think everything is fine, but sooner or later the price is gonna come here and rip all these people. Okay, now we have here a point of interest. Okay, equal highs, equal lows, sorry. Now we're gonna go again here, and we know that the price can do two things. Very simple. Okay, the price can try to go lower, rip all these lows, low, and then go higher and rip all these highs here. This is a liquidity grab. Okay, what we are waiting for is we take the short position and we're gonna place in our first point of interest, the middle point of the imbalance. Okay, the stop loss is gonna be like few pips more higher than this wick over here. Okay, this is gonna act as a resistance for the price. As well, we have this trend line that is gonna act as a resistance. Our target for profits is gonna be all the way to the lower side of the range. Okay, the entry is gonna be around 1,390, and take profits is gonna be around 1,075. Okay, this is for the short entry. Okay, for the short position. Now we're gonna look for the long position. If the price decides to don't hold here, breaks down to take all this liquidity, to take all these equal lows, we are waiting for the price to show us where it's gonna bounce for. Can bounce here and rip higher, or can continue, goes down, break again inside the range, test as a support, and continues to go up. Okay, now we're gonna prepare our entry points for our short positions. Okay, our long positions, sorry. Long positions. Our long position will be one here, stop loss just a few pips below. Okay, just below these lows, below these wicks. Okay, and our taking profits is gonna be the middle point of the range. Okay, the entry point will be around 998, more or less 1,000. Our stop loss is gonna be around 975. Take profits is gonna be around 1,200. Okay, second option, the price decides to rip also these lows here, no problem, we wait, we are not in rush. Long position will be around here. Take profits is gonna be up here. Our stop loss is gonna be lower than the previous low. Okay, lower than this wick. Okay, remember the price never go straight in one direction. Always move like a wave. Okay, up down, up down. You see here, break down, up down, up down, up down, up down, up down. Okay, never goes straight in in a straight line. Okay, clear? We have our points for short and our points for long. Okay guys, if you want a video that I show what mean sponsor candles, get more insight of what is an imbalance more deeply, what mean lower highs and lower lows, all these kind of things, just put in the comments and I go straight. I'm gonna go deeper in the questions or in the problems that you are finding at the time you are trading. Okay, trade is not easy, it's not a magic trick, it's not a magic strategy, but you must find your niche. Okay, your way of trading. Okay, where you can feel more patient, more secure about your entries, your taking profits. Is a process of learning. Okay, don't try to over leverage. Put your stop loss in position and see you in the next video. Thank you very much.